Welcome back to the Humble Market Timer YouTube channel. Once again, if you enjoyed the content, please like, comment, and subscribe. In today's video, I wanted to focus on ticker symbol NEGG, which is Newegg Commerce. It's in free fall, but I do believe it's going to have at least a dead cat bounce pretty soon. Before I go any further, here's my disclaimer. Once again, these are my sole ideas, not investment advice. Newegg Commerce is an online retailer of items including computer hardware and consumer electronics. As you can kind of see from their website, a site very similar to like a Best Buy type of establishment. Nothing really special about the company, but it has really been quite an incredible story this year. NEGG has probably been one of the hottest stocks in 2025. Starting in about April, the stock pretty much bottomed after Liberation Day because they get a lot of their products from China. And of course, there was a lot of hesitancy and uncertainty regarding the tariffs in China around that April time. So the stock bottomed around that area. It did a reverse split to try to maintain compliance with the NASDAQ. And then all of a sudden, the stock started to get footing. It got as low as about $3 in May, and then it kept rising, and then it spiked, and it spiked again. And in July, it really had a nice move, but really took hold of another leg when there was news of tons of insider buying by one person in the company. And that got people really interested and wondering, is there something going on with this company? I truly believe it sort of became a meme stock. And because it had been beaten down due to the uncertainty of the tariffs and the short interest picked up so much, I believe it kind of got adopted. And all of a sudden, buyers just came flooding in, and the stock literally made a move of around $3 in May, all the way to over $130 in August. So we're talking about around like maybe a 40 times move in just 3 months, which is crazy. But that can happen in the stock market. But as I've said many times on this channel, stocks can have a massive move up, but nothing goes up forever. Eventually, you will have a retrace. And that's what we're currently undergoing now in NEGG. As you can see here, the stock went up to all the way to $130, $138, and it has already corrected in the last 5 to 6 trading days from those areas all the way down to the low 40s. So it's only taken 5 to 6 trading days for it to give up gains from 138 all the way down to the 40s. So the next big question is, where can we see a bottom? But even before we do that, let me kind of show you this, what has kind of caused the fall, or what started the fall. As you can see here, there was all this buying by this one individual in July. But as you can see, in the last couple of days, 5 or 6 days, you can see officers have been doing a ton of selling. So they are trying to get out. And that is a red flag to anyone that's trying to buy at prices when a stock very high, when a stock is skyrocketed as much as Newegg Commerce has. So again, we're trying to now find where would be the bottom? And we hear people talk about never catch a falling knife, which is true, but I do believe you can tell by the technicals where potential bounce areas will be. And so first thing I want to do is I want to look at the fibs. And so if we do a fib retracement, we look at the bottom of the move and stretch it to the top of the move. And you can see that we have recently crossed the 618, and we are approaching the 786. Generally, a 618 is a typical key bounce level, but if that doesn't hold, the next level is 786. So be on the lookout for potentially a bounce may be occurring in that 786 range. That would be at about the $32 price target. So that would be the first time, I think, if we got to that area where you could look for a potential bounce. But I don't think that may necessarily be the very bottom. Again, we're looking for areas that could be levels for bounce. As you can also see here in these lines here on the chart, you have a yellow, a green, and a red line. The red line represents the 200 EMA. Oftentimes you get them when there's a significant flush down. You tend to get bounces in that 200 EMA area. That happens to be in that $26 to $27 price range. So you're starting to find a range now where you can look for potential bounces. Again, first starting in that 32 area, which is where the 786 is on the fib retracement, and then you can look for the 25 to 27 range on the 200 EMA, which is oftentimes an area where you get a bounce, potentially when you have a quick flush down after a rocket move higher. But the last thing I want to look at is, and I talk about this a lot on my channel, is I talk about symmetry. And when you have symmetry, oftentimes the move up looks very similar to the move down. And in looking at this particular chart, you see you have the classic M top right here, which is oftentimes a signal for top. And then when you have that massive rollover, you oftentimes get symmetry. So you see we have this move here, and then it dipped, and then it went up here, and we made the M top. And now we're retracing down. And oftentimes you go back to the area in which the stock once moved from, and you get a similar move on the way back, and then potentially further down. So if you notice, see how the symmetry of the line after Drew is not a perfectly drawn line, and typically the symmetry isn't necessarily price to price on the money, but it's oftentimes very close. And if you notice right where you have the retracement and the symmetry from the move up, it starts to consolidate right near that 200 EMA. And just to kind of show you how that happens often in stocks, let me let you look at ELF. This is a company that had a massive move, and you can see it made a retracement lower. And again, look at the symmetry on the way up and how the move mirrored almost identically on the way down. And I think that is what we're in the process of seeing in NEGG. I believe if you really start putting your antennas up, if it works its way down to that 32 to 25 area, keep your eyes on that. We may see a few days of consolidation in that area, much like we did on the way up. And I do believe you could see potentially a 50 to 100% bounce from that area before we may potentially move down even further. But that's a huge move if you can get 200%. That's not moves you can always get in the stock market. But when you have massive flushes down, that tends to yield huge bounces when the selling has reached a certain level of exhaustion. Be on the lookout for that. Be on the lookout for that price range. I think if you get in that time in that area with that price in that pricing, I do believe you could make a huge amount of money simply on the bounce. Wouldn't marry it. I don't think the company is all that special, but I think it does provide an opportunity to make some serious dollars if you can get in near the bottom after this massive flush down. Hope you like the video. If you like it, please like, comment, and subscribe. Thanks for watching.